Do these 3 things to keep from losing money on your next fix and flip project in 2025. All right, Central Florida real estate investors, prices are cooling, inventory is peaking, and interest rates, well, they continue to remain unpredictable. So if you don't understand the current market, adjust your strategy, you could be losing money on your next deal. So let's take a look at Central Florida's state of the market to get an understanding of what we're up against on our next deal. All right, here's the state of the market for Central Florida. This is put out by Aura. This is all their coverage, and they put all the statistics together. So not only are we spending our annual dues on this nice shiny building that they've just put up off of I-4, they're also presenting us with monthly statistics that are vital, especially in today's market, to have a really good understanding of. So let's dig in, let's take a look at them for you. So year over year and month-to-month changes are going to be presented for these key terms. Inventory, I've been stressing, it's going up, up, up. They've indicated that in Central Florida, inventory is at an almost 10-year high. From year to year, it's up 42%. From month to month, up 16%. What is that telling us? That we've got more competition on our next fix and flip product when we're ready to go to market. New listings are up, and they are up year to year and month to month. That's a seasonality issue. New contracts about the same year over year and up from last month in December of 2024. One thing we want to highlight are pendings and closed sales. So closed sales are down dramatically year over year and from January to December of 24. You'll see it here, down 30% almost month to month. And then year over year, down 12%. That's significant, 12% less closings. With a shiny lining in that stat, though, is total pendings. You're going to see total pendings. That's what we're looking at for the future, not necessarily the past. So total pendings are up month to month, about 25%, as buyers typically start coming into the market after the new year. So median price, this is what also we've been screaming on all of our content, is that it's actually stabilized or going down, which is a drastic change from what we're used to as investors. As investors, you've almost been rewarded in the past for buying a flip and letting it sit, and then you come out ahead. So the slower actually meant better. Well, those times have changed. You look at your median price year over year, we're going 360 to 375, and then month over month, 380 down to 375. So that's a 1.3% decrease. I think there's a lot of forecasts out there with a small decrease up to a 5% increase. I'm thinking neutral, possibly a small decrease. So average days on the market, this is important for us because this includes our holding costs. What are our monthly holding costs? Well, they're going to be a lot more now on our project. What you thought was a 3-month project may be a 5-month project. So 2 more months of monthly holding costs. It's going to be really important to understand how much are you spending out of pocket each month once your flip is done, just sitting there waiting for the buyer, waiting for it to go under contract. So year over year, we've got average days of market, 74, up from 57. That's significant, 30%. And then last month, just alone, up almost 9%. So you really start to see that trend November, December, where inventory was really increasing, which is somewhat seasonality, but days on market was also increasing also. So even if you had a really good flip that was done really, really well, it was still sitting on the market longer than we anticipated. Month of supply up to 7.73 from 4.67 and 4.78 year over year, month to month. So as you're going to see, when you come to market, you better be prepared. It's going to be something that we're going to recommend as one of our tips to help you get through this kind of slower market. But let's take a look at a couple other charts first. And let's see, this is going to be smart charts talking about our pricing ratios. So what's the ratio of a property as it originally listed compared to what the average sales price were? So, and you'll see, it's starting to go down and we're actually below 95%. Seasonality, if you want to jump back to 2024 of January, you're looking at right around 95%. So another 1-2% drop in what the average sales price was compared to what it was originally listed at. So on a nationwide basis, I was listening the other day to a webinar from Altos Research, and they indicated that the price drops are at its highest level in the last 10 years. So similar to what we're experiencing in our market with inventory being at a 10-year high, price drops are also at a 10-year high on a nationwide basis. So that's really significant. One silver lining that we can also look at here, if we pop open at our Freddie Mac 30-year mortgage rate, let's see, currently it was 6.85%, but you want to take a look at historically. And when we were dealing with August to about November last year of 2024, we were in that 6.5 to 6 range on our 30-year interest rate. So currently we're closer to 7%. And what happened here? We saw a lot more activity. So I'm kind of thinking that's our sweet spot. So let's keep an eye out on this 30-year interest rate to see if we can get it closer to 6. All right, so what are the 3 things we're gonna do to make you profitable on your next deal? Number 1, I want you to be a price leader. Know that there's a lot of competition out there. So when you go to market and you price, don't do that aspirational pricing where you think you're gonna hit the home run. You need to be aware of what your competition is pricing at and probably go a little bit lower than them. Buyers are going out, taking a look at multiple houses, coming back home and thinking about it. They're not presenting that offer right away. So you really want to be a price leader if you've got comparable properties out there that you're going against. I want you to budget properly. And by budgeting, I mean knowing all your expenses. It's really important, one, to start off going into a project to really get a good understanding of what you think that after repair value is going to be. A lot of people are selling properties now on comps that are 5, 6 months old. I want you to throw those out. They're worthless. I want you to go off comps that are 1 or 2 months old, or make an adjustment for those older comps, maybe 5%, possibly 10%. I want you to be safe. Also understand, what are your monthly holding costs? And by this, I mean insurance. By this, I mean if you have a mortgage, your mortgage holding costs. By taxes, electricity, if you're doing cleaners, all these things add up. You should really get a good idea of how much that monthly burn rate is going to be to hold a property. Why? Because we already saw the days on the market are much higher now. So you really need to adjust your numbers. What could have been 3 months holding before is now maybe 5 months holding. So if you've got an extra $5,000 burn rate times 2, that's 10 grand off of what you thought your profit was going to be. So it's really, really important. You want to understand that. And also another thing that a lot of people aren't talking about are seller concessions. They're happening on almost every single deal. The seller is going to give the buyer some closing cost concessions so they can get the deal closed. It's really important. I would kind of factor in 2 to 3%. I was talking with one of our best borrowers the other day, and he said he's had a deal that was 6% and heard of one where they were asking 9%. Now that's ridiculous. You don't need to do that, but you may want to account for a few percentage points for seller concessions. A necessary evil to get that buyer to the closing table. And third, keep an eye on these interest rates. The 30-year interest rate, something you could check in with us all the time. There's websites out there that'll give you that information. But I think that sweet spot's going to be around 6%. When we're going to get there, or if we're going to stabilize there, I'm not sure. But you can always check it to make sure. And if you're going to market around that 6% sweet spot, you can feel a little bit better maybe about moving that renovated property. All of this cool data that we've gone over, we're going to be releasing it on our website soon. We're embedding a lot of different graphs and market analysis from Altos Research and a couple other vendors as well for you to use for free to help you out on your next deal. So we hope this helps. We hope this makes you more profitable, and we hope you find some good deals out there and make 2025 great.